Hi traders, it's time to record the new weekly forecast for our trading week beginning on June 23rd. Traders, this week could reshape the global markets because the Middle East is on fire. Israel and Iran are at war and US has bombed Iran's nuclear facilities. It's a major fundamental catalyst for energy prices and safe havens like gold. And that's not all. Fed Chair Powell is speaking twice in the coming week, which could be another game changer for US dollar. And in this 20-minute forecast, I'm going to break down what to expect on dollar index, crude oil, and pairs like EURNZD, pound USD, and gold, with technicals, fundamentals, and institutional clues that will keep you ahead. Don't blink, your next big trade could be hidden right here. So let's go. So let's begin our chart analysis with dollar index. And we are here on the monthly frame for dollar index. So here on the monthly frame, I'm going to apply Feb retracement from the previous high to low. And it got rejected at the major resistance area between 78.6 to 85.4. And we also have the choice to apply Fib extension in the bearish direction here. So I'll start from the highest, connect with the first low and the lower high formed. Now since we are going in the bearish direction, I'm going to change the color of Fib extension to red. So I can see a major confluence. So this is the area I'm looking at. So on the monthly frame, based on line chart, it has not yet tested 96.28 or 96.30. On the basis of candlestick, yeah, we were very close to here. We were very close to the magnet zone, but I did not see a major break of this support. Now I'm moving to weekly. Now on the weekly frame, I can see there is a slowdown in the bearish momentum. So MACD histogram has started shrinking with dollar index creating lower lows. So is this the reversal of dollar index? Let's find out. So we need to move down to the next lower time frame, that is daily. And on the daily frame, yes, I can see a very strong bullish divergence built up. So if I start on the daily frame from the high here, so this is our first move down, then this is your next wave, which is the third wave, and it is usually the longest and the strongest. And then we got the pullback. I think this is going to be your fifth wave down, and we have found major bullish divergence here, which means the sellers of US dollar are completely exhausted. Now our exhaustion or basically divergence is not the guarantee of reversal. So we need to find if buyers have started putting in money or not. So we apply here breakout structure level. So in order to claim their control on the market, in order to give the bullish control to the buyers, we need a break above the dashed line, which is breakout structure line. So it is at 101.63. Alternatively, I can zoom in and apply a falling trend line here. So I will connect from the highest to the breakout structure level. Now since dollar has not yet broken the falling trend line, the blue line, and it has not yet completed the breakout structure, officially I cannot say that dollar index has now changed from bearish to bullish. So maybe we might get one more breakdown, so one more push lower with a new bullish divergence, or maybe a false breakout of this support area, and then we can see a quick reversal. But one thing is very sure, that we are very close to the bullish reversal. And I'll move to 4H now. Now on the 4-hourly frame, if I read the market structure, it is still creating lower highs and lower lows. So starting from the breakout structure high point, so this is the level I'm talking about, we have a sequence of lower highs, and lower highs. So until I see on the 4-hourly frame that dollar index has crossed either the falling trend line or the horizontal level of 99.25, I cannot say that buyers have taken the full control of dollar index. It gives me the choice to apply one more Fib extension in the bearish direction, and this time I'll be covering the bigger wave in the downward direction. I'll change the color of Fib extension and I would look at the confluence here. So the confluence is exactly the zone between 96.8 to 97.15, and yes, we've got a bounce exactly from 97.15. But until it creates a higher high, I'm not sure if it has officially turned around or not. In my opinion, it can move further down and create one more leg down with the new bullish divergence, and then once it breaks above the falling trend line or maybe the horizontal breakout structure level, it will be the official confirmation of reversal. Similar picture on 1 hourly frame. On the 1 hourly frame, I change the chart to line again and I can see low, but this low is without bullish divergence. So it is a lower low formation on the 1 hourly frame. So the move up, this move up could be taken as corrective, and I can expect one more push lower. Now, due to uncertainty, geopolitical conditions, US dollar is also considered as a safe haven currency, and gold is also considered a safe haven asset. So during these times, we can expect US dollar and gold both to remain elevated. Now, the next instrument I'll be taking as crude oil. Now, this time I want to start from 3 monthly chart because I want to see a wider frame and long-term scenario here. Now, on the basis of 3 monthly frame, this is your bullish divergence. We got the breakout structure and we got the higher high formation, and it aligns with MACD histogram and MACD lines. So basically the pullback is to be considered as corrective, and now we can expect a new wave up. So technically and fundamentally, now oil looks extremely bullish to me. So I'm going to apply Fib retracement from the lowest to the highest, and this is our major resistance area between 14.6 to 23.6, and our support is here. Now I can move to monthly frame, and on the monthly frame I can see the corrective move down ends with the bullish divergence is potential anticipated because it is giving a lower low formation with continuing type bullish divergence. So I'm not yet sure if it has confirmed the bullish divergence on monthly or not. So I'll quickly move down to weekly now. Now on the basis of weekly frame, it got the bullish divergence between the last two lows, so lower low formation, and on the histogram basis we've got the bullish divergence, so I need to mark the breakout structure in the bullish direction. So breakout structure level for crude oil is at 77.61 or 77.6, which is not yet done. So it gives me the opportunity to apply the trend line validation. Now the falling trend line, the blue color trend line is crossed. So officially I can say on the weekly frame, crude oil has entered into the bullish direction. Now I'll be moving to daily, and I will apply Fib extension in the bullish direction. Now on the daily frame, we've got lower low formation with double bullish divergence, and the buyers have completed the break of structure. So this is the first move up, pull back, and now we've got the third move up. So basically third wave, which is the longest and the strongest. So here I'm gonna apply Fib extension in the bullish direction. Now we have got the extension levels here. So currently we are at extension 200%. Now taking into account the geopolitical conditions, so we can expect that crude oil maybe after a shallow pullback, or it can rise without the pullback as well, but majorly aligned into the bullish direction. Now I'm switching to 4 hourly frame, and on the 4 hourly frame it is continuously creating a sequence of higher lows, higher lows, higher lows, and higher highs. Now if I notice that the last two highs are very close to the Fib extension 200% mark, so temporary pause here. Now it has gone sideways, and I'm expecting that when the market reopens on Sunday midnight, this could propel and break the 200 extension, and it can rise to the next extension level. So the next Feb extension level is 2.618, and it is also very close to our breakout structure level. So the next target in sight is 77.6 to 78.22, and I can mark the next Feb extension on the same frame. So on the 4-hourly frame, I have the option to apply next Feb extension, and I'll change the color to green now, and let's see if it has formed a new magnet or not. Yes, the new magnet is also at the same level. So breakout structure level and the two Feb lines, they are creating a confluence around 77.6 to 78.5. So I'll not be surprised if market reopens with a huge gap up and directly touches the next Feb extension level. And moving down to 1H now. So let's move to 1H. So prior moving to 1H, I'll mark a vertical line on the last C and switch to 1H. Now on the 1-hourly frame, we've got lower lows with divergence, breakout structure, and the pattern of continuation in the bullish direction. So it can rise directly to the next confluence, that is 2 Fib extension lines, or maybe a pullback and then rise. But ultimately we are looking to buy the dips. Now if you do not get the dip, and if you see that market reopens with a huge gap up, please refrain to get into a buy trade immediately on the reopening. Allow the market to pull back and then enter into the new trade. The next instrument is Euro versus New Zealand dollar, and I'll switch to monthly frame here. And the pattern is very clear. It's extremely bullish at the moment. Now on the monthly frame, the last major move is this. So, and this is your downward move, which ends with a major bullish divergence here. So whatever is happening right now in the bullish direction is to be considered as corrective against the previous down move. So I'm going to apply Fib retracement from high to low, and I can see the next major Fib level is 50%, which is price level of 1.9810. So this is the major Fib resistance in sight. That's it. I do not see anything else, so I can apply Fib extension in the bullish direction. I can start from the lowest point of the chart. So this is point A. I'll connect with B and C here. So I can see that yes, it is a confluence of Fib retracement 50% and the current cycle's bullish Fib extension of 1.618, which also gives me a psychological mark of 2.00. So Euro versus New Zealand dollar, currently it is priced at 1.9296. Based on monthly time frame, it can easily reach 2.00. I can use the next cycle to apply the second Fib extension on the monthly, and second ABC applied, and again I get to see a confluence. So we have a cluster of Fib lines coming around 1.9775 to 2.00, the upcoming target for Euro versus New Zealand dollar. I'll place the vertical line here. In fact, it's not required because I have found another wave up, so I can use one more extension in the bullish direction. So starting from A, this is B and C now. Now I'm going to change the color of Fib extension, so I'm using blue color for the last extension, and again it has a cluster of Fib extensions around 1.97 or 98. So now I can bring the vertical line to at point C and move to weekly. Now on the weekly frame, starting from the vertical line, again it has made a sequence of equal lows followed by higher lows, which is a bullish scenario, in conjunction with higher highs without any bearish divergence. So higher high formation without any bearish divergence and aligned with MACD histogram and MACD lines. So the pullback to be taken as an opportunity to buy, and the pullback has formed support exactly on the previous Fib level. So 1.8824 is the major weekly support, and the next upcoming target is at least 1.9680. So I will move directly with the vertical line on the last point and switch to daily now. Now, based on daily time frame, if I start marking after the vertical line, again it has the sequence of higher highs on price chart in conjunction with MACD lines and histogram. So the retracement was to be taken as corrective, and yes, it ends with bullish divergence. So it is a double bottom with divergence, and the buyers have completed the break of structure. So on the daily frame, I get to see another confirmation in the bullish direction here. So break of structure applied, and it is clearly broken. I can use extension here, not possible if I start from the second low, so I need to switch on to 4H. Now here on the 4 hourly frame, I can apply my extension in the bullish direction. So latest bullish extension fib, and we can change the color here, and yes, I can see another confluence. So the target is at least 1.9650. Currently we are at 1.9296, so clearly we have 350 to 400 pips upcoming move defined in euro New Zealand dollar. And on the 4 hourly frame, MACD histogram rising strongly in conjunction with MACD lines and price action. So everything is aligned in the bullish direction. I'll mark the vertical line on C point of 4H and quickly move to 1H. Now on the 1 hourly frame, again I've found lower lows with bullish divergence, breakout structure, impulsive move up, consolidation, next move up with higher highs, but this time I can see weakness building up on histogram. Again, I can see potential bearish divergence which is not yet confirmed, so I'll be waiting for the pullback. So do not enter into buy setup immediately on the reopening of the market. So wait for the pullback. There is a high probability that it can move down, complete its corrective wave, and then move higher. So I think the best area to get into the buy activity is around 1.9122 to 1.9150. And I'll be waiting for this pullback. Or if I'm using my autumn tool to enter into the buy setup, I can apply my autumn conditions in the bullish direction, and my system will keep buying automatically on the dip. So this is how you can benefit. If you know the direction of the market, you can utilize your market analysis, your direction analysis, and you can give the directions to your autumn trading system, and it will do the needful. Next instrument is pound USD. I'll move to monthly. So here on the monthly frame, it is in the bullish direction. I'm going to zoom out completely on the monthly frame, and I'll show you starting from the high, it's been moving downwards and creating a sequence of lower highs and lower lows, but the last two lows are printed with a massive bullish divergence. It means the end of bearish pressure here, and the buyers, they want to take the control here. So in order to give the confirmation of the bullish control with the buyers, we need to check the breakup structure, which is not yet done, but there is an alternative method. We can use the falling trend line. So I'm going to connect the peak with the breakup structure level, and yes, the falling trend line is convincingly broken. So here I've seen that buyers have taken the price higher than the trend line, made a pullback, retested the trend line, and bounced up again. So this is a bullish sign. So I'm going to use my first fib extension in the bullish direction on the monthly frame now. I'll start from the lowest, connect with the high and the higher low here. So the first level in sight on the monthly basis is 1.3764. Now monthly remains extremely bullish and there are no signs against. I need to bring a vertical line on point C and switch to weekly now. Now when I'm looking at the weekly chart, I didn't see that buyers have taken the price exactly to the fib level. In fact, I can see that histogram has started shrinking and the gap between the two MACD lines is also now minimizing, which is a sign of exhaustion. Again, it's a sign of exhaustion, not a confirmation of the bearish reversal. No further investigation can be completed on weekly chart, so I'm moving to daily now. Now here, on the basis of daily chart, I need to check if there is bearish divergence confirmed or not. So if I'm comparing the previous swing high with the current high to be taken as the last high of the current move up, when I'm comparing the two highs, it's a higher high formation on price chart with higher high formation of MACD lines and higher high formation of histogram. So it means there is no divergence between the previous high, swing high, and the current high. But when I zoom closer, so basically now we need to take into account only the last move up. So here, this is the last move up. So I'll be analyzing the chart pattern only in the last upward move. So I've highlighted the area, and when I'm analyzing it closely, I can see bearish divergence is completed. So we have a wider divergence which got nullified because we got a new high. But even with the new high, if I take it as H2 and the last one is H3, I can see there is weakness and histogram has changed from bullish to bearish. So this is the sign of weakness. I can apply breakup structure between the two, and yes, the sellers have crossed the BUS level. Now it's time to move to 4-hourly frame and investigate further. Now on the basis of 4-hourly frame, I've found bearish divergence here, and it is a very strong divergence, and the breakup structure is completed. And I can see in terms of wave count, this is my first wave down, corrective wave up, impulsive down, little correction, and it ends with bullish divergence on the next lower time frame. So I'll switch to 1H and I'll explain. So the wave count here. So this is the first wave down in the bearish direction, corrective wave up, third wave down, fourth up, fifth wave down, and there is bullish divergence between wave 3 and wave 5. So it means we have a bigger cycle bearish. So this is the bearish cycle I'm talking, starting from the high of 1.36. Let me check the exact price level. So high of 1.3629 till 1.3394, and now this bearish cycle is with bullish divergence, which means sellers are exhausted, and I can see after the bullish divergence, buyers have broken the breakup structure in the bullish direction. So after a big wave down, now we are expecting ABC corrective wave up and continuation lower. So in short, I'm going to use fib retracement from the highest of the bearish structure to the lowest of the current bearish structure, and most likely I will see one more wave up. So this is first wave up, corrective down, and it will complete ABC bearish structure. So this is the trend line where we can find resistance, and it is also very close to 61.8. If it breaks the trend line or 61.8, then the next resistance would be around 78.6. So in short, until it remains below 1.3578 to 1.3594, the rise in pound US dollar could be taken as an opportunity to sell. So let's apply our fib extensions in the bearish direction, and prior to that I will use this area to highlight as major resistance. Done. I'll remove the fib lines here, and I'm going to apply fib extension here. So first extension downwards, followed by the second extension downwards. So do we have the confidence? Yes. So I can see, I won't be surprised that pound dollar can move to the next magnet zone, which is 1.3360 to 1.3352, followed by 1.3280 to 1.3265. So I'll be waiting for the sell entry around this area, which is around 1.3552, 1.3550, and I'll be targeting, my first target would be 1.3360, followed by 1.3280. So GBPUSD in the short run looks bearish to me, though the higher time frame is still bullish. Now when I switch to 15 minutes, it is definitely giving me a very clear hint about the corrective move up, because we've got bullish divergence, we've got higher lows and higher highs. It broke the previous major resistance or breakout structure level, completes the bullish wave up, which is forming a subwave of the corrective wave, and now I'm expecting one more push higher. So in short, any rise to be taken as the opportunity to sell. Now XAUUSD, that is gold. So I'll start from monthly here. Now on the basis of monthly time frame, it's a no-brainer. I can still see very strong momentum in the bullish direction, higher high formation, MACD histogram, MACD lines, everything is aligned in the bullish direction. So no point in calculating the fib extensions again and again. I will directly move to weekly now. Now on the basis of weekly frame, I can see that histogram has started shrinking, and MACD lines, they have started converging. So it is a sign of exhaustion or weakness in the bullish rally. So technically, monthly chart is extremely bullish and weekly chart is mildly bullish. Now I'm gonna use candles chart here. So I generally use my fib lines, my fib extensions, my retracements always on a line chart, and I recommend you to do exactly the same. But I just wanted to show you that if I connect my fib retracement just for the validation or the second confirmation on the candlestick basis. So here I'm connecting my fib retracement in the bearish direction from the peak. So this peak was at $3,500, and if I connect it with the lowest shadow during the pullback, so we got a major barrier in between 78 to 85.4 in terms of price levels. This is the price in between 3418 to 3444, or we can say 3445. So 3418 to 3445 is currently acting as a resistance for gold, and the next major level on fib retracement is always between 23.6 to 14.6. So this is our major support. So let me highlight our support area with green color, and the resistance area is already highlighted with red. So I believe gold is currently playing between the two levels, and it is range bound. Now due to fundamental trigger and due to Israel and Iran escalation with US coming in, I believe it is a major game changer and a major fundamental trigger, and I can see that gold can retest the previous high, that is the level around 3,500. Now let's move to daily chart. Now on the basis of daily frame, it has formed triple top, which is again a sign of weakness. So this is first high, second high, and third high exactly in the same range, and I can see that it has completed bearish divergence as well. So this is the completion of divergence, because MACD lines, they have crossed in the bearish direction and histogram has changed from bullish to bearish. Now only divergence is not the confirmation of the trend reversal. Now I'm switching back to the line chart and I need to see the breakout structure. So the breakout structure is here. So a break below 3176 will change the direction for gold, and what in terms of the rising trend line. So I'm starting with the nearest trend line here. So I'll connect this low with the breakout structure point, which is intact. So our rising trend line on the daily frame is not yet breached. At the same time, our breakout structure is also not completed in the bearish direction. So we have a mixed view here. We have bearish divergence, which is a sign of exhaustion in the buyers, but at the same time, the structure is not yet converted from bullish to bearish. Plus, we also have the major factor, that is our geopolitical factor in favor of gold. Now I'm switching to Forex. Now, when I look at 4-hourly chart, and when I'm comparing the last leg up, I can see that it is continuously creating higher lows and higher highs. So if I mark my retracement, because this is the previous high and this is the last move up. So this is basically breakout structure in the bullish direction, and I'm going to apply my retracement from the lowest to the highest, and the current pullback is to be taken as retracement against the previous move up. So I'm going to use fib retracement now between the two highlighted points. So it is taking support on the rising trend line. At the same time, it's a confluence of fib retracement 61.8, and I can see that sellers have lost momentum here. So everything is in favor of buyers again. So until gold remains higher than 3317. Now why 3317? Because this is the price level which is in between 78.6 to 85.4. So this is the support which I believe gold is going to hold, and it is going to rise further. So the first major target is around 3408 to 3422. In case if we see a 4-hourly close or a daily close above 3422 and a decisively or a very promising breakout, then the next level in sight is, okay, I need to apply fib extension here. So I will connect from the low high to the higher low. Then the next level in sight is 3434 followed by 3490. So there is a very high probability that we may get a bearish reversal again around 3434. So from the current price level, if I need to trade, I will trade in the bullish direction, and when it comes closer to 3434 or 3435, so the range between 3435 to 3490 could be taken as a sell range. So I will set my autumn trading system in the similar way that from the current levels I'll be looking only for buy direction, but when it crosses 3420 or maybe 3435, then I'll be playing in both directions. So this is the plan for my